Welcome to Technical Tuesday. This is Fred Razak, Senior Trading Strategist here at CMTrading. And today we're going to be discussing action plan. Now before we start, make sure to smash the like button, share, and subscribe, especially if you find value in this presentation. So we're going to discuss what action plan is and how you implement it in trading and why it's so important for a Technical Tuesday. So when I first started trading, there was a mantra that would continuously be said on the trading desk. And to this day, it rings in my ear. I mean, for almost everything that I've done over the past 25 years, this mantra keeps on coming up. Yes, there were some years that it was dormant, but most of the time it comes back to it when you're taking specific types of trades and when you are entering and exiting the market. This is something that is so important. And the mantra that used to be said on our trading desk was, if you fail to plan, you plan to fail. And I know it sounds almost ridiculously simple, right? Like if you fail to plan, what did you expect? You'd wing it? You would just be lucky because you get lucky? Like what is it, right? Like do you expect a company like JP Morgan or one of these major conglomerates like a Pfizer or like a P&G to ever be put together with just, winging it? Could you imagine putting together a building or even a house by just winging it? No, you've got to plan it. You've got to level it. You've got to, kind of pace yourself at it and kind of plan yourself throughout the stages that you'll need, what materials you need at which stage for whatever you're trying to put together, right? And anything we do in life. And especially when it comes to trading, where it's market action in the field, right? You can compare it to like a battlefield, right? When you're in the battlefield, you can plan it and you could reassess once you're in the battlefield and, but the best type of soldiers are the ones that after the fact, they sit down and they go through a briefing of what happened, what did the enemy do, and how they reacted, and then they stick out to their original mission. And I think that that is so important when it comes to trading, because when you fail to plan and you don't have kind of like a direction of which way you're going in the market, you're kind of like winging it, and winging it just doesn't cut it when it comes to, trying to be consistent in an environment that's inconsistent. Now, I've said this before, and this is something that is just so simple. One of you needs to be consistent. Either the market needs to be consistent or the trader needs to be consistent. And at any given time, it's almost impossible for the market to be consistent because there are specific players at any given time that are trading the markets at any given time. But you as a trader, you have to be consistent. And I'll tell you, I would give up a crazy kind of day in the markets, okay, on the upside of profits to, just wing it, than to make almost nothing throughout the day, okay, or even to lose some money throughout the day. But nevertheless, I traded my plan. Because when you're not trading your plan, you can't recreate success, right? Success is really just recreation of the same thing. I mean, Coca-Cola doesn't have to do anything new every year, right? They are Coca-Cola from year to year. They're just repeating success. That's all they're doing, right? And we're just consuming their success, right? That's basically what it is. So when you set out before your trading day, and some of this is generated, through third-party suppliers or third-party signal makers and all that, but there's no reason we can't do it at home, right? So I'm going to just share with you with some of the cheat sheet that we used to set up before a trading day, just to give us perspective, right? So we would have something that looks like this, okay? It's a simple matrix. In the middle, you have the symbol, okay? So whatever symbol you're trading, and underneath it, you have the individual symbols. So you start out with your Euro USD, the GBP USD. I have the Dow Jones up there, the NASDAQ, okay? You have Apple, okay? And you choose which ones are there, okay? So as a new trader, this is what you want to do. You want to become familiarized with the particular assets that you're trading, so list them, okay? Have them up there. Take a look at them on a daily basis and just review them. You kind of get to know their character better. Now, on the left-hand side, okay, this is resistance levels. Now, we've gone over resistance and what it means and what's the implication of it, and you just need to know the levels, okay? So write them out, okay? Have them on a piece of paper, not just on the graph, because when you see it in numbers and you look at it on a graph, okay, it has different meaning. You've extrapolated information from one set of vice, okay, to another set of vice, that you could be a little bit more clear as to which direction you want to trade it, right? Especially if things are breaking out. Now, I want to highlight something right now on the Dow Jones, okay? There's upside potential of a big gap between one resistance to the next. And if we look at the GBP, if it breaks this resistance, well, guess what? There's no resistance in sight for another 10, 15 pips, for another 1,500 pips. That's a major move. When you're trading this, that means the GBP is on the upper range. Mentally, I've already shifted, and I kind of said to myself, you know what? The GBP is pretty strong this time of the year. It's getting very strong. Now, I do have support levels that I do put up, and I respectfully have them. And so if I am getting closer to one of these, then it becomes a lot more interesting. I also map it on a piece of paper so I could reference it in my head, that I'm not solely dependent on the charts itself. In the olden days, they did not have charts to trade off. They had numbers, and that's the numbers that they traded off. And I think that if you look at the numbers, I know, if you looked at the numbers and you paid attention to what support levels are, and you had them already pre-recorded, you would be that much more in tune with what the market is doing, and you would be able to act and trade that much faster and that much more responsive to real time when you have this at the tip of your fingers. Now, you can make this to 100 shares, you can make it to 50 assets, you can do whatever you want, but this is just a basic guideline or cheat sheet of, okay, I know where I'm at. All right, this is getting here, it's getting over there. I see what this is happening. And then you can kind of gauge for yourself with a little bit more clarity in the markets. Thank you for joining me for Technical Tuesdays. We'll see you here next week.